Greetings, everybody. Episode 452, Monday market wrap up. And the big topic today is that oil is negative $37 a barrel. There's a lot to talk about there. Yeah, this is April 20th, I think. Yeah, it's 420. Oh, snap. The 20th day of April Fools. And oil is negative. Yeah, negative 37.58.
Is that first time ever?
Yeah, well, it had never been lower. The current market had never been lower than like $10.38 since the oil trading ETF market kind of thing emerged in what, 1987 or something like that? 1983?
Yeah, 3.
Something like that. And it went down well, in international markets, it was $18 on Friday, and then it opened at like 16 in international markets, and then it dropped to like 15, and then to 10, and then to 5, and then straight all the way to 0. And it actually ended up going negative. I'm just going to show people. Oil, here you go. Crude oil, 26 cents a barrel, down 99.18%.
Bam.
And it actually went negative, and the reason it went negative was there were deliveries due today. There was a big, the Western Texas crude contracts were all due today or something.
Yeah.
And there's no place to put it. Mm-hmm. There's no place to deliver it to. All the storage is full because there's no demand. So you have no place to put it. So it literally, Robert Wenzel made a note that they'll literally have to dump it in your backyard. Or I think he made that note. Somebody made that note in one of their commentaries.
Yeah. I got places they can put it.
yeah.
Gladly, hang on. Mm-hmm. I was thinking about, the terrible ramifications it has, that we'll get into, but at the same time, it's kind of neat. We're a part of history. We always talk about, Grandpa said back in the Depression, yada, yada, and he did rah, rah, rah. We get to tell our grandkids about the Second Great Depression. Mm-hmm. I saw oil at negative $38. It dropped 300% one day. Wow, Grandpa. We're living a new history. On that side of it and only. It's pretty cool.
Mm-hmm. It's beyond weird. And it's not, the thing is, so I bought a bunch at 18. I bought an ETF that has a lot of futures contracts at $18 a barrel on Friday. And I was like, $18 a barrel, we're never going to see this again. And then I got up this morning and I was like, what? 15? Well, and the ETF I had, it hadn't gone down much because it's heavily weighted. It'd gone down like 10% or something. I could live with that. And then it was then you sent a note that had gone to 10 and then 5 and then just straight up 0. Let me pull up what this, I'll tell you the ETF I bought. Anyway, I sold it for a 14% loss. I bought UCO, which is ProShares Ultra Bloomberg Crude Oil. And it was only down 14% on the day, which is it's still trading after hours. It was down like 15% on the day. Mm-hmm. But, I sold it, took a 14% loss. But I was reading just to get out. I was reading surely the price has to come up, at least in the futures markets. And it's well, maybe not. Maybe not. There's a bunch of production to stop. And there's a bunch in storage, but there's no demand. And when's demand going to come back? Nobody knows. Mm-hmm. And when demand does come back, when when all these stay-at-home orders lift or whatever, I've been thinking about this myself. I don't really care for as busy of a lifestyle as I had before. I'm kind of liking the leisure.
I think you're right. I think a majority of people are going to feel that same way. I really do. And I think a lot of the workforce that's going to get, as soon as the government passes this next bailout thing, which I don't know if it's in still or out. They've been pulling it and putting it back in. But this guaranteed income of $2,000 a month per household adult and $500 per child. I mean, we were talking about the other day that over a 12-month period, this is basically going to guarantee $142,000 a year for a family of 4.
Mm-hmm.
Unprecedented. Who's going to go work?
Mm-hmm.
I mean, you'd have to be dumb. It's tax-free. That's the biggest thing. It's a tax-free money. But yeah, I agree with you totally, Dave. Why would this is kind of the new normal. And not only are the tankers or the tanks full, the storage tanks, every single oil tanker sitting in the ocean is full also. No place to deliver.
Mm-hmm.
And they hold what, 2.5, 3 million gallons each or barrels each?
Corey sent me a couple of months ago. We were talking about like what to buy on the other side of this, and I was kind of joking, but kind of not joking about buying warehousing because of supply chain volatility. Warehousing is the vaccine to the supply chain. Anyway, Corey sent me a video, and it was this Australian investor guy. I don't remember his name. I don't have the video. But he's been like a commodities trader. And he's done pretty well. He's done well in times of crisis, but he's not a Peter Schiff, gold's the only thing to ever buy sort of guy. He's a normal guy. And he noted that he was buying storage on tankers. This is like a month and a half ago. And his reason was because oil was already in this thing called contango. I'm going to post the link to that, which is where there's a contract to deliver a commodity in the future, like in September. And the customer's already agreed to pay $30 a barrel. And oil's $20 a barrel. So if you buy it right now and store it, you are guaranteed to make $10 a barrel. So there are companies that were doing that back then, and you could buy room on a tanker for some reasonable amount. And now I put in the quote from Robert Wenzel's article that you were talking about, Josh. Storage has gone from 14,000 to 400,000 a day. And the more
when does that become non-viable?
Well, the bigger the contango, the more viable that is. Right? Like if let's say you bought a tanker of crude at 1 cent a barrel today. Let's say you bought a tanker of crude at 1 cent a barrel today, and you have a delivery contract where you're going to get paid $30. You're going to make, I don't even know what percent that is. It's 30 over 100 times 100, right? 30 over 100, or 30 times 100 times 100. You're going to make 300,000% on that tanker full of oil. So if it costs you $20 million to sit for a couple months, you're going to make 300,000% on that. So the contango is just off the charts weird.
Unbelievable. And I said gallons. I was wrong. They hold like 2.5 to 3 million barrels, which is times 42 gallons. So that's a lot.
That's a lot. So yeah, the demand might not come back.
Mm-hmm. Well,
or not in the same way.
Yeah, there's a new habit of living now. People are living in fear of going within 6 feet of people. And air travel is a big part of it. Who's going to start going on vacation as soon as this is over when they haven't worked in 6 months? So it'll carry on for quite a while. And they're talking about carrying this out for 18 months.
Yes, this could go on for a long time. I am going to show a chart. View image. And then I want to full screen this. Yeah, there we go. I'm going to do a StreamYard share. Bang. Oops. I'm going to do it again.
I've seen also that natural gas is pointing upwards, and that different oil companies are talking about reevaluating oil production into gas production, which is interesting.
Mhm.
Ba-boom. Apologies for not being able to make that bigger. I just don't know how to make it bigger because I'm a retard. Here's crude consumption by sector. So I'll just describe it. Yellow is transport. Orange is industry. Gray is non-energy. So this is like plastics and stuff like that. And blue is other. What I really want, I'm going to look for this a little better. I really want transport broken down by air travel versus road travel
and ship travel. I mean, those tankers use a lot of fuel to go across the ocean with 2.5 million barrels of oil, and they're all sitting. I think ship freight probably is east.
I've looked this up before, and I was just astounded that cars dominate it in a really, really big way.
Mm-hmm.
Because I didn't think that. I thought that air travel was a big deal. Let me see if I can find this.
Well, a guy on Fox today, Fox Business, when I saw we were talking about oil in the negative, I flipped that on to see how they were freaking out, and he was saying, "I just don't understand because there's still trucks are still delivering and blah blah blah." And I thought that's not very smart. Trucks use a lot, but not in comparison to cars, and there's not as many trucks. I mean, take Alaska for instance. No one's working here. The North Slope shut down. What guys were doing 3 loads a week, they're doing 1, and the rest of them are doing none.
Yep. Even let's look at transportation.
Yeah.
So here's the whole pie. So here's transport. It's more than half. Power and cogeneration. Well, that's down, which means conversion losses are down. Industry's down. Residential is probably flat. And then this stuff's noise. And then non-energy, this is like plastics. So those are down too. But anyway, this is half the slice. So now let's move over here. This is transport. Here's ship. Ships are 10%. Ships are 10% of this 50%. So that's about 5%.
That's less than I thought it would be.
Yeah, it's weird. It's nothing. And air travel is also nothing. It's only 5%. And rail is nothing. Diesel trains are radically efficient. Like if you wanna increase the efficiency of the transported goods, you do it on diesel trains. Trucks and cars, that's the 76%. So it's 3/4 of 55%. Let me bust out a calculator here. 53.5 times 0.765. Boom. So that's 41%. So that's this one here. This is 41% of total oil consumption. 1/3 of it is for trucks and buses. 2/3 of it is cars, scooters, and stuff. This has basically dropped to 0. So we multiply that 41% by 0.67, and that is basically 27.5% of global demand is for cars, is driving up and down the road. It's 1/4 of all oil consumption, more than that. It's shocking how much it is. And air travel is not much, and that's huge. Like if you're in an industry, if you miss your forecast by 25% or whatever, that's just massive.
Yeah, and even think about the sectors that this hits that are outside of the energy sectors, like the electric cars. If gas gets down to 75 cents a gallon, who the heck's going to buy an expensive electric car?
It won't be for mileage purposes. Although people aren't currently buying them for mileage purposes.
Right.
I mean, there's all sorts of reasons. There's all sorts of reasons people are buying them, but yeah, hard to say. Yeah, there's that, and there's it's nice not having something that takes time to warm up, and like there's some convenience reasons too. But and that stuff's all getting cheaper. So yeah, I don't know. But the cost of owning a gas car just went through the floor because like your oil changes just got cheaper too.
Mm-hmm.
Tires are going to get a lot cheaper, like all that stuff. So
yeah, fuel mileage all of a sudden is the last thing you're going to ask them about if you're buying a new car. What's your fuel economy? Who cares?
Yeah, it doesn't really matter. And so I was curious how long it'll be low, right? And people like normal industry people are saying, it probably won't go back above $20 a barrel for the rest of the year.
Yeah, in August, deliveries are at 32, I think, right now, a barrel. But I can't imagine that's going to stay up because I think June's already dropped below 20. Well, where it was above.
Yeah. And also the rapid drop in price, you're probably going to see a rapid drop in production. It's going to end up being right now it's a oversupply because of a drop in demand, but soon it's going to be a supply shortage. Soon, I mean within a couple of years maybe. Right.
Like so
yeah, so you go way down one and you're going to come way back up. What goes down must come up. What goes up must come down, right? So
what do you think? So what do you think about that recovery given collapse for demand, Mike? Because I've been thinking about that. What do you think about that?
Recovery in prices?
With the whole okay, so there's a glut on the market now, but supply people are shutting off wells. Okay. Right. And then demand's going to come back, but it's unlikely to come back as strong for all sorts of reasons. Like for one, there's a fear aspect, but even outside the fear aspect, a lot of people are just like, staying home's pretty great. And then there's the people won't have money to travel as much anyway, which will affect air travel, but cars are the major driver. So demand probably doesn't come back the way it did. So what do you think about, there's the V-shaped recovery, or there's the ramp, or there's the overshoot? What do you think about that? Just shooting from the hip.
Yeah, I'm thinking that when the prices increase because of a supply shortage, and people aren't working, they're not making the money they did, they're going to be hoarding the money that they have, and it's going to be a shortage in the market all around. The farmers aren't going to be producing what they did. They're not producing what they did now because of restaurants being closed down, right? So farmers are going to be going out of business too. And are we going to be seeing starvation, or at least a mild famine as a result? I see the issue being shortages in the future. Right now we have a glut of things, and people there's a story down here that about zucchinis being thrown out on the beach. Farmers just grabbing the stuff and throwing it on the beach and throwing it away. They're not going to go back and produce the same amount next time because they're going to be afraid of losing it, just like they did before. And so where we had a surplus now, we're going to have a shortage later, and that's kind of the thing to prepare for.
Well, the only food that has gone up, at least that I saw today, was wheat. It went up quite a bit, but everything else dropped. I mean, even soybeans kind of always seem to have some kind of a market, but it was just
right.
I watched a little bit. The Secretary of Agriculture was on that Fox Business thing that I was watching, and he was kind of showing a little concern, but election year, so everything's all good. Oh, we don't need to worry about it. And Neil Cavuto was kind of needling him a little bit, like, but if nobody can go to work to do these packaging and shipping and all these, what do you mean it's going to be okay? He said, how could we not have a shortage? Because one of the largest pork packaging plants in America shut down in North or South Dakota this last week. They do, I don't remember if it's 7 or 13% of all the pork products But either one of those percentages is quite a bit.
Mm-hmm.
And pork was the other. Let's see, eggs was the first thing we reported that jumped, and pork's been the next. I think, what did we say, 30%? Pork's gone up in the last month. So those short spare ribs.
Freeze them up.
That's right.
How does the
Throw 'em in
oil,
the freezer now.
on oil in particular, Mike, how do you think the shortage comes about? What does that look like to you? I've been kind of gaming that out.
Yeah, I'm kind of thinking oil producers are just going to be shutting down wells, and I don't know. They probably won't be shutting down wells until they have to, because then it costs money to get them going again. So I would assume they'd like to prefer to keep them going. Would that be right, Josh? That's
it does.
How it is in the mining industry.
It costs a lot to shut them down. It costs a lot to restart them. But the federal government is seriously talking about paying the producers to stop drilling and pumping oil. And
that's right.
Again, on that business thing I just watched, or Fox Business today, they were calling the government to do that again. It's the only thing. And
that's how the shortage is going to happen right there.
Right. Which is so wrong, because we have, if you want to call it an artificial decline, or, a managed decline in the economy or whatever, central planning. Okay, that's one thing. But then you're going to artificially inflate oil when the rest of the economy is depressed. What the heck's that going to do to the rest of us? If we don't have any money because we're not working, oil needs to come down so we can afford what little fuel we use. We don't need it to go skyrocketing back up. How does that help the rest of us?
Yeah, well,
I mean, it helps a really small sector. And the oil sector, while it's big money, it's really small.
Right.
As far as the entire employment is concerned.
And you remember during the last Great Depression, the federal government went and bought up, what was it, 4 million pigs, I think it was.
Yeah.
And just to keep the price elevated, and then they just took a bunch of them out and shot them in a ditch.
Yeah, they culled them.
Tens of thousands of them, and
while people were starving.
People were starving. Yeah, so they're going to do the same thing this time, except it's probably going to be worse this time.
Well,
here's the
we'll
negative.
See if they do that.
I'm just showing that not all the prices are negative. It's specific markets.
Right.
Right.
I think
it's specific markets that went negative.
Yeah, Mars was positive when I looked at it 2 hours ago. Now it's negative.
Negative 30. So that was another contract that had to be delivered.
Mm-hmm.
It was positive earlier today. You're right.
Huh. Yeah.
Yeah, and you can see the chart over there on the right. So it just crashed just a little bit ago.
Yeah, and West Texas is back up to negative 13.
Yeah, look at that rebound.
Those green numbers don't mean what they used to. I can tell you that.
No.
I guess Brent crude will be next, because it's still positive. So.
Yeah.
It hasn't gone negative yet.
I kind of disagree with the heading there, that it's not as bad as it seems. I mean, on the one hand, sure, this is about the current contract, but that doesn't say that doesn't give anything positive for the future contracts at all. Because there's no change in the near future that we can really see.
Well, the volatility just keeps getting worse and worse.
Yeah.
Oh, I apologize for that video.
U.S. drillers shed 260 rigs in 5 weeks. Wow.
Yep.
Probably learning about the China disease.
What's interesting about the oil price thing for me is when we had Robert Wenzel on the show, we talked about volatility. And he said, things are probably going to go back to the way, some semblance of normal. And so if you buy something cheap, just hang on to it and ride it out. And he advised buying stuff when it was cheap. But today he was saying, if you got oil, you should sell it. Well, in particular, WTI contracts. What was his update? If you own a futures contract to take delivery, you'll need to sell now or take a very large loss, or end up with oil being dumped in your backyard. So that's if you own a futures contract specifically. But what's interesting, he didn't make any. I just put it in the live comments. He didn't make any, definitive claims that he knows the future. But his general approach was look for good deals. But what's funny is stuff is so weird right now. You don't know. Like I thought oil at $18 a barrel is a pretty good deal.
Oh, I thought that was like, wow. Just like you said, we'll never see this again. Woo-hoo.
And then you got inflation, right? Because there's all this money coming in.
Hey, that'll drive oil up. We won't be able to afford a gallon of gas here pretty soon.
Well, like Mike's notes on shortages. Yeah, I kind of agree. Like shortages sort of make sense when nobody's working, but demand for all sorts of stuff is down, and like on food, I don't know. On food, I don't know because so much gets wasted, like a lot gets wasted, and especially in like way more that goes to restaurants gets wasted than that goes to grocery stores, and so the calorie efficiency of a grocery store, is a lot higher. But there's currently no food shortages yet, and they're still dumping milk, like we talked about. And I watched some articles about guys in Florida who were complaining about low prices, who were, I forget, they had melons, or maybe that was the cucumbers or something. But they were plowing stuff under too. So I don't know. I don't know if there'll be shortages. I mean, it seems like there would be, and it seems like the prices of stuff will go up too. But on what timeline?
Yeah. It's hard to believe in America, especially, or in North America, let's just say, to even think about food shortage, period. But it's impossible to believe that oil would be at negative $38 today, too. I mean, would any of us let's say Saturday's show that we did, that was the furthest thing from any of our minds that that was even possible.
I guess now's the time to stock up on heating oil for next winter, right?
Yeah. One of the problems with all this shortages is that there's one thing that's not in shortage, and it's in becoming an overabundance, and that's dollars. That kind of feeds into the inflation, creating more and more and more and more. And guys, help me on this one. Because we talk about it a little bit, but maybe we don't explain it. When, say the Federal Reserve, creates a bunch of digits and it goes here and there, whatever, it's not necessarily printed cash money. So is there a big difference in, let's say, inflationary terms, or is it more of a negative when they monetize it and they start saying, okay, well, we're going to buy these assets out, we're going to monetize these debts? What's the difference between, so like with the first $4 trillion that the Federal Reserve said it was going to use to buy bad debts and repos and stuff like that, Wenzel was talking about, well, that's going to be kind of a number shuffle. These digits will be shuffled around and everything. And then, they said they're going to monetize 2.3 trillion. So what's the difference between those things?
Well, with the dollar, with the Federal Reserve, they have to basically engage in a bond swap when they're doing that, when they're printing their money. They actually have to back it with bonds. Now the European Bank, the ECB, doesn't have that requirement. They can actually monetize. They can literally monetize just by printing up cash. And that's one of the reasons that there's more confidence in the dollar. So as bad as the dollar is, the euro's even worse. So you're back to that. The dollar is the best of the worst options, right?
There's a inflation versus effects of inflation thing there too, right? Like when the new asset is created out of nothing, that's inflation because you've made the appearance of more without there being more. And I think a lot of Austrians. I think Peter Schiff makes this mistake a lot. That's the inflation event. He actually clarifies this, but not, I don't think, to the understanding of his listeners. You don't care about inflation. Inflation doesn't matter to any of the three of us. What matters to us is the effects. And the effects are not predictable. They're asymmetric. You don't know where they're going to happen. So the effects of inflation could be if people start buying houses with all the new money, then all the new money could flow into the housing sector. And then the effects of inflation are a ramp in housing prices. Well, if you're not buying a house, who cares? Your food hasn't gotten more expensive. Your energy hasn't gotten more expensive, whatever. And if you're selling a house, that might actually help you. But if you're buying a house, that sucks. And so that's the effect. And I think when they create the new asset, that's the cause. And then when they monetize the new asset, when they issue money for it, that's the effect. That's the initial effect. And the beneficiary is whoever gets the money first.
Right.
Because they get it. The value doesn't go down until it starts to be circulated. So whoever gets it first gets it at the old value.
The highest value.
Yeah. But then the effects are downstream. You guys in the live chat, you guys were in our little, side chat that goes through the day. You guys were having a conversation. I think Mike, you were in on it, and Adam was in on it. You guys were talking about, and Josh, whether it's better for the monetization side to be an asset purchase, like the Federal Reserve buying some obscure instrument, or issuing just checks to regular people.
Right.
And I think the checks to people is way better.
Absolutely.
Yeah, I think I missed that conversation yesterday. So I caught the end of it. Yeah, the real crisis is going to be when there's no more confidence in the bonds, and the people are just exit the bond market. That's when all the government pensions are going to crash because they're all invested in the bond market.
Right.
Oh, but there's a bailout coming for that.
Right. Mm-hmm. They won't be able to sell assets anymore, but they could just print up checks and send them to the retirees.
Mm-hmm.
And who knows how that would work? It would work for a while. Like all of this works for a while. That's what's funny about it.
No, it does. That's why I think, at least, well, I think we all feel the same way. But for me, it's valuable, our little super secret side chat that we have, that only I was going to say the elite friends get to be in, but we're not so elite. Only a select few get to be a part of. Is valuable. That's why I hope that this show's valuable, especially right now. It's working right now in the most, if you want to say profitable or equitable or the best way to deal with it right now while it's working, because there are things we can do to make it work longer than the rest of the world or the rest your neighbors. It's not going to last as long. We can draw out some goodness a little bit longer if we do things the right way, smart, wisely.
Yeah. Because we're in it.
Right. There's not a whole lot of choice as far as, you could burn the check or, like our good friend Randy, send the dividend back to the state of Alaska to help their ever occurring woes with their budget. But you're still, everyone else is still getting it. So it's going to affect you one way or the other.
You're in the game.
Right.
There's certain things, whether you participate or not, the effects will still affect you personally.
Well, yeah, and if they do it like they did last week, you don't even have to ask for it. It just shows up. You have no say.
Oh, they just mailed those out?
Yeah. Well, they just deposit it in your account.
Okay.
Oh, yeah, they just, I guess you could go live in the woods, but to say that that's not affecting you, I think is false also. Yeah,
it depends on, it's the supply chain thing. I mean, that's the we had a little chat about we're all in this together, and we are all in it together in that we're all interconnected, but the results will not be the same for everyone.
Yeah, I despise that phrase. Just get that out.
Yeah.
Because of that, because we're all affected so differently.
We're all affected differently, but
Yeah,
we're
and
all kind of we're all within the system to some extent.
Yeah, I just think it dehumanizes some people's. Some people are really, really hurt right now. You know, some people are really. There's people killing themselves over some of this stuff. So I haven't, so I can't say that I'm being affected the same as someone that would take it to the point where they would take their life over it.
Mhm.
They certainly didn't feel like they were in it together.
Well, one of those.
That's just why I don't like that.
Yeah, one of those people I saw several days ago was a high-level German banker.
Yep.
So it's not just people who don't have any cash either.
Correct. Yeah.
You may be
Good
better
point,
off
Mike.
if you're just homeless and this is the way you normally live.
Yeah.
Yeah. Everyone else is just coming down to your level, right?
Different impact. You
Oh, my
guys
goodness.
want to do a little bit of Alaska budget? That's topic number 2. Alaska budget, the economy, the PFD fight. Like that fits into all of this. Like oil going negative is topic 1. Alaska economy is topic 2. I think that's pretty relevant. What do you guys see as far as that goes? Because people are still bickering about this $3,000 dividend. Like, do they understand where that comes from?
Is there any other money coming into the state to keep it functioning?
Right. I mean, not really. I mean, the state runs off of oil tax revenue, essentially.
Mm-hmm.
So what, like the budget for the state is just radically, totally hosed, especially if these prices don't recover. And then the state's economy is beyond the state government running off of oil revenue. The private sector is largely service companies that support oil extraction as well.
Mm-hmm.
I mean, and then there's fishing and gold mining, but those are again like that energy slice. You know, cars on the road is a major portion of that, and gold mining and fishing are cute, but
and so
we may not have a commercial fishing season.
Right. Yeah, that might get canceled too.
Yeah, and so much of the local essential services are property taxes from those businesses that can't work. They're going to be going out of business and foreclosing on their buildings. So next year, the borough, how much money are they going to have to spend to pay their education bonds and all that stuff that they passed? Anchorage is really bad about that too.
But they'll get a bailout. I mean, I think a lot of what Alaska, I read something not too long ago where Alaska was, what was the website? Excuse me. It was some financial website, and they were saying that they saw Alaska as the hardest hit economically of all the states because the state government relies so much on the oil industry. And the private sector does too. I mean, Fairbanks does. And you can't really count Anchorage out. There's a lot of people. There's a lot of big buildings down there that people go to work to every day that are part of the oil sector. So I guess it depends, you know, if Trump gives us $10 billion, that'll get him through a few months.
Yeah, still no. All the native communities, not all, but many of the native communities are super reliant on oil also.
Yes.
Not
just the ones on the slope.
Right. I think isn't the state budget somewhere around like $3 to $5 billion?
It's close to 5.
Okay. And isn't the PFD somewhere around like 10 billion in the total fund? Something like that?
I thought it was closer to 60.
Okay.
Yeah, I think it's around 60.
So it must be that that's how much they take from it each year.
Yes. And I cut out for a second, but I think you're starting to mention that people are not being affected as far as the way that they're still demanding their PFD.
Yeah.
And they're talking about a $5,300 PFD to make up for all the back ones where we got stolen from. Stolen. They stole that money from us.
Yeah, and what's it? Yeah, the way people are talking about the PFD is as if the 3,000 is the real amount, but that was never agreed on.
No.
I'm on Wikipedia here. At the end of 2016, the fund was worth $55 billion. So it's probably down. I mean, with the market being down, what do you think? I mean, it's probably down at like 40.
Yeah, they've already made some comment about they expect it to be quite a bit lower this year.
Oh, I mean the total fund amount.
I'm sure it's going to be down.
I bet it's still close to 60 because I'm sure it was last year. It was at 65.
Okay. Yep, could be. So anyway, that's a few years of the budget. But if that gets flushed out, through big dividends and oil prices stay low, like that thing shrinks to zero real quick. And the PFD is not paid out of the principal; it's paid out of what's made on that.
Right.
It's paid out of
the yield. I wonder if people understand that.
No, this is like what Mises talked about. He talked about if you run out of money for wood, you can heat your house by burning your furniture. But when you run out of furniture, like as soon as you get to the point where you start burning your furniture, you're into a different regime. You're still keeping your house warm, but it's no longer a sustainable thing. It's a finite thing.
One thing also to think about is that being that it depends on the earnings from the market, from the stock market, right now the market's low, but in the future it's gonna go up. It's gonna go way up because people are Europeans. They're moving out of the European market. They're moving out of the bond market, and all the bond markets are going to collapse. So people are going to be moving to the private equities. So you're going to have an increase in the Dow, not because companies are doing well, but just because people need to have a place to park their money. So
that makes sense.
Yeah. So if they're still investing in the stock market, the dividend could actually do well.
Interesting. Yeah, interesting.
And there are some things that are going up. I was looking at a pharmaceutical, and it had gone up from like $7 to $27 in the last month, and the projections were they didn't really have a limit to the projection. So, I mean, whoever's in charge of that, supposedly they're smart people. You would think they would see some of those things too. It seems like the people in charge of the permanent fund dividend section, the permanent fund, seem like they just stay steady though. Whatever they're in.
Right.
They don't seem to play very much, which might be smart. But
yeah,
normally, but this isn't normally.
Yeah, there's opportunities to play in it. I mean, I made about 40% today on a sale. So, but I lost money on other sales too. So,
right. And if you're the guy that has control of the dividend and you put it in the wrong thing, you're going to get massacred.
Right. Yeah. Yeah. When you're playing with other people's money, yeah, you don't want to start taking chances.
Yeah, it's pretty boring. I think it's full of pretty boring investments, which is good.
Right.
But the fundamental underpinnings all this energy stuff. So.
Yeah, and it's interesting the way you say other people's money too, Mike, because that's what Alaskan residents are seeing it as. That's why, this theft in that article I sent where the guy was saying that they're taking the money right out of your pocket. And these are Republicans, conservatives, fiscal conservatives. You never, ever hear these same jackholes talk about taxation being theft. Stuff that really is taken out of your pocket. This guy's just saying not giving you something is theft. but actually taking something from you, they don't consider theft. They're still debating, and there's still significant pushback of suspending the payroll tax for 1 year. That would be great.
Yeah.
That would be an instantaneous. Now, there's not as many people at work, but when they open it up, I mean, the average, what is it, 13% or something? And the companies have to, they match a lot of that. Some of it's dollar to dollar or percentage to percentage, and to act like that wouldn't help is just, it's irritating. And some libertarians or Austrian types, they don't think it's a good idea, because if there's no government decrease in spending, then we'll just have these higher debt ratios and higher deficits. And blah, blah. Who cares?
Yeah, who cares?
In my opinion, who cares? They're printing freaking money like it's going out of style. They might as well. I mean, how could you even? That boggles my mind. Anytime they want to take a tax away, I don't care how much they're spending, really, because it's out of my control. It's so far gone. There's no hope to actually fix it. I think there's still some types out there that think, well, if we just did this and this, by golly, we could eat that debt up. Come on. It's the entire U.S. economy, GDP, several times over. Forget about it. Besides
the same folks who say the debt isn't serviceable are the ones who have the issue with loose monetary
policy. Right. Besides that, it's the greatest opportunity. The only thing I can see to collapse the state system is for them to do this, which it may never happen, but it's the only thing I can see to actually have it happen.
Yeah, well,
it's our best opportunity.
Yeah, and unfortunately, the flip side of that is if they collapse the state system, what worse thing are they going to bring in to take it over? Is that when
they could.
Is that when they're going to bring in the UN troops? Yeah,
better.
Yeah, they're going to bring in the UN troops and enforce the global taxation. So
might be better.
It might be. Yeah,
I'm always on the side of it might be better. But anyways, just it's ridiculous. Cut the tax. If you want real savings, if you want to give people money in their pocket, suspend the tax. I don't think that they will. I mean, they might, but I just don't see that they would, because in a year's time, how do they re-implement it?
Well, we have to be consistent too. Remember, 2 months ago we were talking about the Jones Act and our hope that we could get it suspended for Alaska, because once they suspend it, they never bring stuff back, right?
Right.
So maybe they'll just never bring it back.
Well, I think you're right. That's why I don't think they want to suspend it, Mike, because how could they bring it back? Because people would be so upset if all of a sudden your paycheck is 33% bigger. And people never realize that was taken out of their check, because most people just don't know that money's taken out of their check. It's just, and those that do, it's just part of doing business to them. And once they're getting it, they're going to be pissed the first time that it gets taken out again.
Yeah, we know, but we also know that the true purpose of taxation is not to provide infrastructure. It's to provide easy money for lobbyists and politicians, right? That's what it tends to be used for. So,
but if you're
with the amount of debt that's monetized, like it's not really an important thing for the budget at this point.
I've always thought taxation was just to make people know who's boss.
Yeah, well, that too. Yeah.
At least in these times, in these days. But I mean, if they suspend that, people don't save money. They're going to spend it.
Right.
So they're going to come to rely on that extra $300, $400, $700, whatever it is. They're going to spend that every week. And then their lifestyle is going to change to absorb that extra money. And then when they try to take that away, that means they have to cut whatever that extra money was out of their life. They're not going to go for it. So I think that's the resistance, really.
At that point, what's the state going to fund itself with?
They don't have to. We're all MMTers now, bro. You just print. It's our money. We can do whatever we
Yeah,
want.
the actual funding that comes from tax revenue is really small at this point. It's like less than 20.
It's only a third.
Yeah.
Is it? Yeah, it's so insignificant. It's not even close.
Right. Now, as you progress into this, you end up with the bond crisis, and they do have to back the money that they issue with bonds. And so if people aren't buying bonds and the taxes aren't coming in, then do they have to
The Fed will buy them.
Monetary system.
The Federal Reserve will buy them.
Mm-hmm.
Well, I just don't know where this ends, because everything that we bring up that we know is correct, they just buy it. We'll just print the money. That's their answer to everything. So why would they stop it at municipal bonds? They're already buying municipal bonds. They have in the past, and they're doing more. And that's one of the things they're monetizing is municipal bonds. Where does it stop? What has to stop them? I mean, they're talking about there was $8 trillion added to the debt. Rawr. It could be $100 trillion by the time Trump's out, and who cares? They don't.
Right.
It matters at some point for somebody.
It does. Yes, I know. In the short term, though, the way, and I'm not saying it's right. Okay, I'm not saying it's a good thing to do, but I'm saying their mindset is, well, we can monetize that. We'll bail that out. We'll buy that up. We'll buy that up, because they have no idea what money is.
Yeah. Well, and ultimately, a monetary system a currency has to be based upon the confidence in the issuing agency, the issuing government, right? And like it's dependent on the confidence in the economy that it is over. So if you no longer have confidence, what's left to base the strength of the currency on? Control? Confidence?
But again, I mean, yes and no. People need dollars even if the U.S. economy doesn't move anywhere, which we've gone through. People need dollars to clear their transactions internationally. And international economies are worse off than the U.S.
Right.
So, like, all the arguments are valid. And in a world where there's any alternative, they would be significant, but there's no alternative.
Right. Yeah.
Right.
I don't think
in
I
an
was
honest
talking to,
world.
I was talking to Josh from Seattle, and neither he nor I think a dollar collapse is coming. We're not investing for a dollar collapse anymore.
No, I'm not either. I expect them to just the world to call for a different currency because of a shortage of dollars itself. But
yeah, that can certainly happen.
I
mean, you get one press that breaks down because you didn't oil it correctly. Dang it.
Yeah. Well, that's what happened in the Great Depression, though. Remember, they basically had to revalue the currency. So.
Yeah, and they did. And
volatile times will result in volatile solutions.
Yeah.
It's crazy. And again, like we said at the very beginning, it's kind of neat we get to live through it. I hope we live through it, but it's kind of we're living history. It goes back to the show we did a few weeks ago. This is the new normal. What you knew February 1st or December 31st, 2019 is never coming back. Never coming back.
Right.
And how convenient. I mean, just like guaranteed incomes, right? That was rawr. Only stupid Bernie Sanders would even bring that up, or OAC. And now, shoot, the Republicans, they can't step on each other fast enough to say that was my idea all along. Yep.
So, Josh, you're up in Alaska. What do you see going on in Alaska right now? Are people just hanging out? Are they moving? Are they leaving the state? What's going on?
A lot more busy this week. So 2 weeks ago, went to town. Very few cars on the road. Very few. And it was kind of I know that was maybe it was 3 weeks. It was kind of when it first started, when the first lockdown order came. You go to town now, and it's almost like, restaurants are empty and whatnot, but there's cars everywhere. I was actually surprised. I think it was Saturday. I was surprised how many cars were out driving around. But as far as leaving, it's kind of interesting you say that, because Brother Nate said today he knows a whole bunch of people and named off several that packed up this last week and leaving the state to find work.
Yeah. So I would imagine real estate prices will be falling pretty soon then.
Well, and some of the trucking companies have laid off all of their owner-operators, and those guys are just leaving, which is the same thing that happened in the 2015 downturn on the slope. A lot of people left, and this is why, thinking that, well, we just go back to work and everything will be back to normal doesn't happen. So many people left last time. There's been a shortage when we've had the uptick of work on the slope here this last year and a half. We haven't had enough drivers. There's not enough people to employ. There's not enough on the slope. There's not enough in Fairbanks, and there's not enough people because so many people left and they won't come back. And it's happened. We're getting, sounds like, even more of a migration out of the state than 3, 4, or 5 years ago. So you can't just go back to normal and ramp things up because there's no people. You have to have butts in the seat to drive a truck. There's a limiting factor. You can only produce as much as you have human bodies that make things happen. So I think that's going to be a long-term downside to whatever starts back up. Might be really good for a few people that stay. It might not either, because some companies, if you're a company and you're thinking, okay, I have this many assets, I need this many people to be profitable utilizing these assets. Oh, well, now I still have this many assets, but only half as many people to utilize them. I'm losing money now. Because like your insurance, you have to insure everything. You don't just say, you don't pick and choose. And as we all know, equipment falls apart whether you're using it or not. So it's depreciating while it's sitting in your lot, whether you're going up and down the road or the rubber's rotting on the rims. So I think it's going to be tough.
Volatility around. It's going to be tough. Everything's going to be weird.
Not insurmountable, of course, because it seems like people just figure things out. But I think it's just the falsehood. We got to get out of that mindset when we're told, oh, everything will be back to normal. Because I've talked to so many people or listened to so many people that really think that that's possible. Like it's going to be a flick of the switch. Boom. All right, let's go. No, not so much.
Yeah, it's like the stages of grief. They're in denial about it right now. The economy died. It's not coming back.
No, I think it certainly can come back to a certain extent.
Yeah, it'll come back.
It'll be different.
To a different degree. But the old economy that they knew is dead. It's going to be different.
Like David said, this has gotten people have a new understanding, or maybe a different appreciation for what they were doing before and what they're doing now. And a lot of times our jobs take up so much of our time, especially when you own a business. It takes a lot of your time. Almost every waking and a lot of times every sleeping hour, you're thinking, okay, I got to do this, I got to do this, and even employees, it takes a lot of their time. Now you have a lot of time to sit around and think, and a lot of time to think, maybe that wasn't so important, or maybe I've been doing without this for how many weeks? Why do I need it back? Well, I've lasted this long on this much money, and before I could only go a week at a time. I don't know. I think people are gonna readjust their values, readjust their priorities.
Mm-hmm.
Yeah, I think that's going to happen too, and it'll ease the landing.
Yeah. Well, even say a guy was used to making $110,000 a year, and he's sitting around reevaluating his life, his family's life, or whatever, and said, "Wow, we could live on 50 if we didn't do this and this and this." And then, wow, I've been busting my rear end to get this extra $50,000 for what? Because they're not saving it. That's the biggest thing. No one even knows what that means. They just spend it. So if they see that they can do less and still have a comfortable life with less, I think that's what people are going to do for a while.
Right. For a while. Well, there'll be a culture. There'll be some people who do it where it sticks
throughout. Yeah, it will.
Yeah.
I think what will change is there'll always be somebody that wants the more, and they'll see opportunities that'll show up because people have stopped doing this or that, and they'll take advantage of it. Yeah, I don't know. Yeah. It's different.
Yeah, for sure. I am going to, between now and Wednesday, get a little more info on Alaska budget stuff. I'm going to run some of that down. And then also...
You might have a source.
Might have a source. I'm going to put a link to... There's an Edward Snowden video that Corey sent along that has now been taken down. I found it on BitChute. I'm going to watch that as well. The subject was that people are worked to the point where they don't have time to think. And this guy, I think Snowden was talking about that, but I'm going to watch it. This guy, Stephen Freeman, who Corey sent along. I talked about him on Saturday. I'm going to put the link in the live chat right now. He gave a talk that is really, really good, and I want to talk about it on Wednesday or Friday when we do our next episode. And he sort of addresses that question, like, okay, now we got some downtime. What do we want to be doing? Like, everybody's doing something, but nobody knows why. And so he talked about uselessness, and he said there's kind of two ways to think of uselessness. One way is that you can't make use of something, and the other way is that uselessness is a category of things that aren't supposed to be used to accomplish anything. They're ends in and of themselves, like time with your family or something. Like, I mean, there's obvious uses for it, but a lot of people would say, well, if I can't make money on it or move this forward or do that or whatever, then it's useless. And when they have that definition, then when they engage in certain things like that, they feel like they're wasting their time. And this sort of forced sabbatical that's going on right now, I think a lot of the anxiety is because people feel like their time is useless. So he addresses that. Stephen Freeman addresses that in the talk that he gave. So it's right there in the live comments. If you guys have a chance to watch it, I'd love to talk about it on Wednesday or Friday. And Corey threw a bunch of notes together here that are just phenomenal on it. They're in our show template doc. So that'd be fun to talk about.
Very good.
Fits in with the value realignment thing that we're talking about as well.
Mm-hmm.
So yeah, let's do that on Wednesday or Friday. I mean, take a look and let me know what you guys think. And for the listeners out there, people in YouTube land, check the live chat. The link is in the live chat. And give that guy a watch. And I'll be very interested in your comments and thoughts on that on our next show as well.
Yeah, and And people, I think we said the other day, have, we kind of have topics that we hit every time we come on. But if someone has something that they're wondering about that they just like to hear us banter back and forth on, throw it in the comments because we will talk about it.
Absolutely. Cool. Well, I
One
will
thing we love to do.
catch up with you guys on Wednesday. Thanks for jumping on.
Sounds good.
See you then.
All right. See you guys.
See y'all later.
Bye.
Yep. Bye.